All right. Hey, everyone. All right, we're all set here. Mark here, Mark P. Markets. Thank you so much for joining me for today's stream, my Bitcoin analysis stream. If you're new to the stream, welcome. I'm sorry I'm running a little bit behind, but I appreciate your patience. So here is how the stream works. All right, so first, I'm going to go over the economic calendar. Then we're going to talk about this Bitcoin situation, and we're going to talk about this questionable price action and why I believe that there is some selling activity going on here. All right, and it's important when it comes time to shaping your expectations. Plus, I have a special announcement today, so we'll get started with that first. All right, so let's get this stream going here. Hold on a second. Also, if you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Okay, so here we go. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so now, before we get to the economic calendar, I have a very special announcement that I'm excited to share. Okay, so drum roll, please. Oh, I don't have a drum roll effect. Sorry, no drum roll, but imagine the drum roll in your mind, okay? I'm very pleased to announce that my new website is now online. You can check the links in the description on both platforms. I am simulcasting on TradingView. By the way, TradingView people, if you can't see me, just refresh your browser. Here, let me move this over here so I can see what's going on over here. Okay, cool. And you can see what it's all about. Now, real quick, the new website, which I would like to introduce to you, is called marketsignalspro.com. This website, basically what it does is we've taken our trade scanner, right? We've taken my trade scanner and we made it so that it can send you emails. So all you have to do is check your inbox. So if you're interested in cryptocurrencies, you're interested in stocks, you're interested in Forex, right? You can get these signals now in your email. You don't have to go to the Discord community anymore to mess around with the channels there and the push notifications. You don't have to do that. You can simply check your inbox and place the orders. That's how easy we made this, okay? So there's some great advantages to this, especially if you're new, because it reduces your learning curve to nothing, all right? I know that's a very bold statement, but as you get to know the signals, you'll see what I mean. It takes your emphasis away from all the things that cause confusion, and it allows you to focus on what's more important, which is what you should be focusing on to begin with in the first place, and that is the bigger picture, okay? The context. Plus, I will be now that I'm free, we've been working on this site for weeks and weeks and weeks, okay? And also, another thing real quick, let's all give a very special thank you to Stian over here in the chat, because if it wasn't for his relentless work ethic, this site would not be possible in the form that it's in, okay? He's the architect behind all the programming. He's made all of this possible so that you could receive an email when the bot sends out a signal. Plus, he also helped build the bot so that we can send out these signals to begin with, okay? So if you really want to help him out and you really want to thank him for this amazing work that he's done, simply go to the affiliate links, right? There's for Bybit and for MEXC. If you're interested in those exchanges, register, fund the account, okay? And when you place a trade in one of those accounts, Stian gets a small commission. And that goes a long way for the support that he provides. I mean, he's brought such amazing technology to the community and this website. All right. And by the way, if you're like, well, I'd like to see a track record or something. Let's see, what are the signals like? Well, thanks to Stian, we have a track record on the site, which you can see, right? All the results are in real time. So you can see what's going on there and you can see everything else. Now, you want to try it out because you're unsure, whatever, we got you. We have Trade of the Week. All right. Now, my regular members are familiar with Trade of the Week. It's been going on for quite some time, but it is now available by email. So you can consider this like a free trial. Just go to the website, right? There's a link in the description. Sign up with your email, and you will then like what do you call it? You'll get an email to confirm or whatever your email address, right? A double opt-in, and then once you're registered, all you have to do is sit back and wait for signal to come, and it will go straight to your email. All right, so that's a great way to try this out It's free, and I highly recommend that you paper trade the trade of the week so get a feel for how the system works and see if you like it or not. Okay. By the way, each trade has a stop loss and a take profit level. I highly suggest you respect the stop loss, especially if you use real money, because these are momentum trades. Right. To quickly explain how the robot works, it simply looks for a trend. Right. That's its first step. The second step is it looks for a pullback. The third step is it waits for a reversal confirmation. Once that confirmation comes about, the signal is sent and you can receive that in your email. Okay, so again, this is very exciting for me because I've been working on this. I mean, I built the bot. It's based on my experience, so you're not going to find this anywhere else. Okay, also another point about these other signal providers. You'll notice if you check out their websites, if you're familiar with them or not, that they never put their names on the website. They're always anonymous, right? They say, oh yeah, we have all these great signals, 100% win rate, nonsense, blah, 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 right? No name. They're anonymous. I put my name on my website and my picture. So I stand behind my system, and it's based on my 20 plus years of experience in the markets. Okay. You're not going to find a system like this anywhere else. And basically, so it gets you from having a hard time, confusion, having doubts, second guessing, being emotional, to you're working with a system that takes the same trades for the same reasons every time. All right. And we have the coins, we have the stocks, we have the Forex. It's all there. All right. So I just had to mention that. I'm excited about it. And I hope you are too. Again, thank you, Stian, for the amazing work, because this, to get it to this point, it took a while, and I'm very proud of this website. Okay, you guys. So that's the big announcement. Check it out and tell me what you guys think. All right, now let's get into the economic calendar. All right, and then we will talk about this. Hey, Milad, how are you? Let me just say hello to my people. David, good to see you all. Okay, Sean, Sam. All right. Oh, by the way, all my members, by the way, check out the testimonials. See if you can find yourself on there. All right. Okay, cool. So anyway, let's get into, thanks you guys. And now I'm going to be more present in the community as well. I've been absent because, as you can see, we've been working extremely hard on this. I mean, Stian stays up till like 2 a.m. I got to force the guy to go to sleep because he stays up till 2 a.m. and he has 2 other jobs. So again, a lot of thanks to him. All right. Because this is a lot of his work that you're seeing here as far as the technology. All right. Now, let's talk about the economic calendar, and then we'll talk about this chart here, because you guys need to understand what's going on with this price action. All right. First thing, this week, what do we have? I'll start it off, right? We have the Bank of Australia. We have the rate announcement. Now, my calendar said that it's tonight. You can use any calendar you want with this. You can use TradingView. You can use whatever. I saw a report tonight, but then I saw something for Thursday, which I thought was strange. But anyway, so obviously the Bank of Australia is having their rate announcement. So that's important. If you're involved in Forex, be aware of it. Okay, Wednesday of this week, what do we have? Wednesday is what? The 8th? We have, hey, Kai, Alex, good to see you guys. All right, check out the new website, you guys. Links are in the description. So Wednesday we have what? Chairman Powell. He's going to come out and he's going to have some kind of speech. All right, maybe that's why the markets are so quiet today. They're waiting. What's he going to say? What's he going to hint at? I don't know. All right, but if there are any surprises, you can see a range expansion one way or the other. So be prepared for that. Markets also have a tendency to get quiet going into such speeches, right? So keep that in mind. Also, we have on Thursday, I believe there was another, no, that was the Aussie rate announcement. There was another rate announcement this week. I'm just trying to remember who it was. I can't remember now. But there was another, I believe there was another rate announcement. So just be aware of those rate announcements. Those are the only things that matter. There are other things on the economic calendar. You'll see like a GDP from the Bank of England or whatever. Those things don't really move markets. It's things that move, the dollar, right? Things like non-farm payrolls, FOMC meetings, CPI reports, things like that. Chairman Powell testimonies. Those are the kind of things you have to pay most attention to, because that's where you can see any type of surprise will move the market in a big way. And you don't want to get caught on the wrong side of that. This is about mitigating risk, right? So for example, one thing you can do if you know you're going into such a report, and same with quarterly reports for stocks. This month, we're going to see a lot of what? Q4, I believe. We're going to see the reports, or is it Q3? And then it's Q3 reports, right? And then January, we see the Q4 reports. So Q3, stock, quarterlies coming out. Just be aware of them. All right, cool. Thanks, Kai. All right. Yeah. He's speaking on the 9th too? Okay, no, it's on the 8th. Right, it's Wednesday. Right. Okay. No, so it's only one day. All right, cool. So that's where we are with that. Again, if you're in a position, perhaps you want to reduce, if you have a profit, maybe you take something off the table going into a report. Maybe if, you don't have a position, you avoid, or maybe you just stick to day trades. In my TradingView article that I wrote yesterday, which hopefully you've read, I talk about how a conservative position, right, versus a aggressive position when it comes to this Bitcoin chart. So we're going to talk about that here in a moment. All right. But anyway, so that's what's going on in the economic news side of things. Let's make this chart bigger, shall we? Because I don't look so pretty. All right. There we go. And let's take a look here. Here, let me move this. All right. So let's get into this here and see what's going on. Now, keep something in mind, people. Since we've had all that nonsense back in October about, ETF, blah, blah, blah. I mean, has an ETF ever come out? I don't think so, right? Interesting. But Bitcoin doesn't pull back. I mean, has the ETF come out? I haven't seen anything about that. Maybe I missed it because I don't pay much attention to news. But it was supposed to be some kind of leak, right? And the ETF was supposed to come out in October. It's November now. Where's the ETF? So do you see what I mean about that nonsense? Okay. Hey, Andre. All right, cool. Hello, Mr. Yeah, I know. I've been busy, man. When you don't have time for stuff, you look like this. So anyway, so this Bitcoin situation, right? This is what we need to pay attention to here. Not my beard. All right. Let's move this over here. So I drew this rectangle, right, in this area. Why? Anyone want to tell me? Anyone want to tell me why I drew that? That's like a new piece of information on the chart. Let's see if you guys can figure it out. My students probably will be able to. Check that out. What do you think? Why have I put that there? What do you think that means? Anyone want to guess? It was never supposed to come out in October. Okay. Oh, I saw something about a leak in October. Again, I'm going by YouTube titles. Okay. So yes, well, this is a resistance level, and it's a potential failed high situation, right? Is what we have here. That's what this represents. Because why? Why is it a failed high? Well, because we had this high over here, right? This little high back here. See that? Followed by this new attempt at a high, and it's failing. Also, if you notice in this area, there are a lot of wicks and sticks. You see that? You see all this? You see all this price action in here? All this noise? You see that? That is very telling. That's why I'm telling people, right? The title is Price Action Showing Bearish Signs. Well, what bearish signs? This thing is failing. With this type of momentum behind it, this is not what you should see, right? When it pulls back, it should continue. It should flow. This isn't flowing. So several inside SEC sources are now confirming that the agency will attempt to create a level playing field for spot ETF applicants. Okay. Oh, strategically leaking plan. That's interesting. Very interesting. Before Thanksgiving, so that no one in the market can get a clear. Okay, cool. Hey, Aries, good to see you. Well, all right. So I'm not answering questions unless you're a student or a member of the community. So I'm not going to look at the BTC dominance. That stuff is not that important anyway, to be honest with you, right? All you need to really pay attention to is Bitcoin itself and price structure. If there was any advantage to using the dominance, then it would be worth something. It's not. It's just noise like everything else. It's just random like everything else pretty much. It's not going to give you any solid. Maybe it can help bolster an opinion, or it can basically help you, add weight to an idea, but it's really, it's not necessary, right? Especially for swing trades and day trades. I mean, that's really what I'm looking at here from that perspective. So what we have here basically is problematic price action. This is not bullish momentum. So how do we go from this, which is extremely bullish, to this, right? That tells me that there's something going on here, as in someone is selling, because it's absorbing all this. Whoever's buying this, you have to be a fool to be buying at these levels if you're doing anything besides a day trade or a swing trade. Like if you're investing here, you're like, hey, this thing will be at 50K by next month. If you're one of those people, you get what you pay for, man, because this is bearish price action. Now, so what do you do here? That's more important, right? I can rant about this all day long. What do you do here? And why do I have this little drawing over here? What is that? Well, this was the scenario that I was anticipating 2 weeks ago. And it's, as you could see, it tried, but it's not exactly reaching the 37K resistance, which is, that's a pretty significant resistance level that dates back for quite some time. And we are failing below that level, right? And it's starting to form a new minor resistance. So my point is this is a place to sell, whether it's to reduce positions, take some profit off the table, or if you want to be aggressive, right, short this thing. Now, I still don't short Bitcoin. The robot does, but I don't. And if you're looking for shorts, right, this would be the place to think about it. But again, it's counter trend. So you have to understand, it's not about, this game is not about, oh, I'm going to forecast the future and I'm going to make money on this move that I think is going to happen. It's going to go here, right? No, that's not how it works, man. What you're trying to do is you're trying to weigh a probability. And in this area, right, probability favors some type of pullback, in my opinion. And that pullback can take us back into like this area here, right, with 33, 32K area. That's the next major support, is this area. Right? We're not at a major support. So buying here in terms of day trades and swing trades is a low probability idea. That is all that matters. You buy it, you're taking a greater chance. If you sell it, you would think, okay, well, logically, if buying is bad, selling should be good. Not exactly, because you're still fighting a bullish structure. And any little piece of news can come out and cause a squeeze, right? And do that, because a lot of people are shorting this, right? Because that's the obvious thing. So what I'm saying is, if you're aggressive, for one, you want to take that short, you should consider day trades, not larger time frames, right? Day trades, meaning you're watching a 15-minute chart, maybe a 30-minute chart, right? You get the signal on there, you grab 100 points maybe. This thing fluctuates around 100, 200 points, whatever, something like that. You're in, you're out, you're done. Because this thing may not pull back to this support. It doesn't have to. Markets are random. They can do whatever they want. Some news comes out unexpectedly. This thing is, this thing could spike. Just like this move over here, right? Spike caught a lot of people off guard. Something like that can happen if there's some kind of unexpected news. What if Powell says something? Well, what if something else? There's so many factors that go into a move. We can't pinpoint one, right? Everyone's talking about, the ETF thing, right? Well, that is a catalyst, but there are also other catalysts that may not have an effect, but then suddenly they do. So there's no way to know them all. You can't focus in on one and point your finger and say, well, that's the one. It may be the one for the moment, right? But things change really fast. So it may not pull back here. But if it does pull back here, this is a high probability location for longs, right? So the aggressive short idea is short day trade, right? And again, you would have to use a smaller time frame for that. You would be looking for maybe pullbacks into this area, which is not very much, but it's a small expectation. It's reasonable. And if you're wrong, you take the stop, you get stopped out, and you're not exposed to any type of massive squeeze that may take this thing up to the next level, right? It can happen. So I'm not trying to pretend here that I know the future. I'm trying to show you the possibilities and how to adjust when the market provides new information. So as a conservative swing trader, I'm looking for this pullback, okay, into this area. I'm willing to wait. And if the market doesn't deliver that, then I have to adjust and come up with a new scenario that I'm willing to work with. These scenarios are all about risk. I'm willing to take risk in this area here, okay, because I believe it's a high probability area for a long. It's very similar. This is very similar to playing poker, okay? If you don't know anything about poker, basically, if you have some really good cards, like 2 aces, right, when the hand begins, you're starting out with a very strong hand. So you can aggressively play that hand, and chances are you'll win. There's a better chance, right? Because people will fold. If you go all in, right, you don't even see the flop yet, you go all in with your aces, chances are most people will fold. And since you have a very strong hand, chances are you will beat most hands, except, of course, if the flop comes out bad for your aces, then, you can lose. But the point is, you start out with a strong hand, right? So this area here is a strong hand. That's the way I'm looking at that. And that's where I'm willing to take the risk. Up in here for longs, this is a weak hand for longs, right? For shorts, it's a little bit better, but you're fighting the bigger picture. It's not ideal for shorts. So please, I want you to understand the contrast between the two mindsets. Is that clear? Because that's really like the key lesson here. Understand the contrast between aggressive short and conservative long, because that mindset is what shapes your decision-making process going forward. If you don't have a mindset and you don't have some type of framework to go by, you will be all over the place. You will have doubts. You will second guess. You will be emotionally vulnerable. And you can't have these things happen. I mean, look, I've been in this game a really long time, and there's still times where I make these type of mistakes because I'm a person, okay? And there's really no way around that, but I'm aware of them, and I know how to minimize them, but it happens, right? So that's why you have to have a framework to at least avoid most of the mistakes or the really common mistakes. Because understand that this game is heavily weighed against you, and chances of winning are very low to begin with. I mean, you are your own worst enemy in this game. That's number one. All right. Plus, you don't even understand, most people don't understand who you're up against and how they operate. All right. So it's very easy to lose. So you have to maximize your chances. And that's when you get a strong hand, you want to maximize your chance. The strong hand is here. Does that make sense to you guys? I know I repeat myself a lot. Does that make sense to you guys? Let me see what you guys are saying. Okay. Hey, Sheplik is here. How are you, man? Long time no see. All right. He's a big wig over at TradingView. If you like mess around with the house rules and you get banned, that's the guy. Okay, so don't mess with him. And don't mess with me because he watches. People spam my chats and stuff, and then they get banned. All right, that's my guy right there. Thanks, man. It's good to see you. Okay, we got Base from Melbourne. All right. Oh, my Australians. Oh, dear. Hello, mate. From Melbourne. It's like 4 a.m. over there. All right, cool. I'm just looking at the chat here. Yeah, Cheplik, man, we got to do something. All right. So any questions about that? If you checked recent CME report, all the institutional fund managers have closed shorts completely. Now they have only longs. That's interesting, Yo-Yo. The CME report for Bitcoin, you're talking about the Bitcoin futures? That's very interesting. Because, they could be wrong too. There's a herd mentality with them as well, right? So, I mean, you're saying that they've closed shorts completely and now have only longs. Okay. Only longs. I don't know, man. I mean, I wouldn't want, if I was long, I would at least want to sell some, but also you have to understand too, they're not day traders, right? They're not swing traders. Those are people that hold for broader moves. Okay. But that's interesting. Okay. E-gold looks nice. Okay. I could take a look at that. Hey, Tillin, how are you? Long time no see. Okay, cool. Well, I'm trying, man. I'm trying. All right. So you guys clear on that? Let me know if you have any questions about this Bitcoin situation, because again, over the next few days, I'm anticipating that this thing pulls back. Okay. I'm anticipating a move like this. I could be wrong. Okay. I'm not always right, but based on this price action, that's what it looks like. And sometimes sometimes I'm wearing my Captain Obvious hat, and you got to be careful with those Captain Obvious moves. But if I was going to place bets on the short side, I would do it as a day trader, and I would just take small bites. Okay. And then see if there's any kind of sustained move. And as far as being conservative, I want to see pull back into this area, like I keep repeating myself, And that's where I would like to look for a swing trade long. Now, keep in mind, it's possible that the market only pulls back to there, right? The market does what it wants to do, not what I want it to do. So if it pulls back into a tighter area and I see the confirmation, I will consider that because the general structure is bullish. All right, does that make sense? Okay, so students, if you have questions, let me know. One thing I want to do here real quick is let's jump over to the bond market. Now, Sam said something interesting the other day, and Sam, I meant to respond to that, but it's been hard for me. Something about a book, and this was in the community chat, and he was talking about how basically the book explained that something like Bitcoin can break away from this economic relationship, which is here the ZN1, right? This is the bond futures, and well, I have to read that. I'm not familiar. I've never read the book. I know the author. I'm familiar with the author. He's written some excellent books. And if you want to put the title of the book, I can't remember the title. If you want to put it in the chat and share it with people. But I'm curious to read the book now that you mentioned it. But the thing is, as far as breaking away from the economic cycle, well, look, anything is possible. I just find it hard to believe because bonds control the world, right? Bonds are everything. Bonds are where money comes from. So if there's no money, I think it's just harder for some kind of sustainable rally to develop or asset bubble to develop, because I mean, historically, that's always been that way. And it makes sense because cheap money is what drives asset bubbles. Okay. And we don't have cheap money. Maybe the market's preparing for cheap money, right? With this little bond move here. But understand, and this is another point that I made in my TradingView article, understand that a move like that doesn't really change anything. That's a very important thing. Like, people get excited. They see a few big green candles and they're like, oh, bullish trend. That could be the beginning of a bullish trend, possibly. But, it started retracing. Look, at a resistance level. You see this? Double top. If Bitcoin looked like that, that's an ideal short setup. All right. You see how we went from the Bitcoin chart? Just compare the charts, right? Forget the market, what the market is. Just look at the pattern. This is Bitcoin, okay, which is not a short, and this is the bond market. Do you see that contrast? This is a short. This is what an ideal short looks like, right? You have basically a double top. The general trend is bearish, failed high, double top situation, and you have an inside bar. Right? This thing closes like this, takes out that low. We have a short signal on the bonds. The question is, do the bonds make a lower low? Theoretically, they should. Okay. Theoretically, they may not. They may find a higher low somewhere. They may consolidate, whatever. Maybe Chairman Powell will have something to say on Wednesday that can affect this thing. Does that make sense? Do you see that contrast? So my point is, if this thing works its way back to that low, rates are rising again, right? I don't know how Powell is going to cut rates or pause. I just don't know. Look, I don't know anything about, I don't know how the Federal Reserve conducts itself. I don't know what goes on behind closed doors. I don't know how the Treasury Department conducts itself inside, right? I know there's a lot of politics going on, so I don't pretend to know their agendas. But the thing is, it doesn't seem like inflation is under control. All right, I understand there's a lot of political pressure on this guy to cut rates, but I don't understand how he can do it. Okay, without causing hyperinflation again, or getting into that route. He's been on an agenda to raise rates, and I thought he was doing the right thing. Anyway, it doesn't matter what I think. My point is, if this thing goes back to those lows, I just don't see how we can see a sustainable rally, right? Especially in Bitcoin, especially altcoins, which are highly speculative. Now, I could be wrong. Now, here's the NASDAQ, right? One point I want to make about this. NASDAQ had this massive rally since FOMC, since NFP, because all that information delivered bullish outcomes, right? Basically implied that Powell is not going to raise, or NFP implied that he's not going to be able to raise, right? I guess because NFP came out bad. And that means that if it's recessionary, that means he's more likely to pause or to cut, right? That's the idea. Anyway, now keep in mind, seasonally, this is a very optimistic time of year. This is usually the Santa rally time, and this makes a lot of sense in terms of Santa rally. So if you're not long now for stocks, if you're not long, you don't chase this. You're right back into a resistance area. So you don't chase it. You don't short it. You just stand aside and you wait for a continuation pattern, and you get smaller as far as your time frames. Perhaps day trades are more ideal. I always resort back to day trades when the general location is less than ideal, okay? Because day trades allow you to take smaller risks as long as you are managing your risks carefully. People that day trade and they don't use stops and stuff, well, you're just out of your mind. All right. So what about BTCD? Well, I'm not going to look at that. I have to answer this question from Alex. Why do we always compare markets historically? Why not think about year after year or after it can be evolving in markets? You, out of all people, know this better 20 years ago, and now you can, well, that's a good question, right? Why not think, because I'm not, the purpose of this stream, I'm not looking long-term like that. I'm only looking at day trades and swing trades, like I said earlier. I'm not going to look year to year. By the way, you can't really forecast years. You can't. It's not, markets are random. If you learn to accept that first, then you know that we have no idea where the market will be a year from now. 20 years ago, no one had any idea where the market would be today. No one called anything. All right. No one knew Amazon was going to go to $1,000 or whatever it was, $2,000, whatever that price was. Amazon was $5 a share back in 01 or 02 or whatever. Okay. And they thought Amazon was going to fail pretty much like the rest of them. Right. And over the next 10 years, they always said, oh, Amazon doesn't really make any money. They don't make any money. And next thing you know, the stock's at $2,000 a share or whatever it was, right, before they split. So there's no point in trying to forecast the future. You know how many experts back then were called, the market this, the internet, right? The internet's the future. Well, they were right about that, but most .coms are no longer in existence. So what's the point, right? The internet, they were right about the internet, but we only have like a handful of stocks that are still around from that time, right? Really, literally like a handful. So that's why we're looking. The idea here is to focus on and manage risk on these smaller time frames, right? Again, this is a stream for day traders and swing traders. This is not an investing stream. If you want to see investing, there's plenty of fakeroos for that. All right, so you get this thing with the NASDAQ. That's what's going on here. All right. Now, this generally is a bullish structure. These pullbacks, right, basically into support, were never really that bad. In terms of the structure here, they were really not that bad. Look at this. When you zoom out, I mean, that's a lot of bullishness. This is just a consolidation. It's just a pullback, right? It's just a consolidating pullback that takes a really long time. Then again, this is why you can't get caught up in opinions and stuff like that. So look at levels, look at structure. That's what I always resort back to. Okay, we have support here, we have resistance here. It's that simple. Don't buy here. Wait for pullback if you're looking to get involved with swing trades. Investing in stocks is another story that you're dealing with the bond market. All right, I'm not going to get into that now. I've talked about that many times, especially in my community and stuff. I don't think this is a good time for investing. I never do, because that's all based on the bond market. And another thing that I believe is when the bonds do finally turn around, because at some point they will, that's the time to start investing. It doesn't matter if the prices of the stocks are not at the bottoms. It doesn't matter, because you know what? Trying to catch a bottom is way more expensive than missing a bottom. People don't realize that. Or catching a top is way more expensive than missing a top. What you want is you want to be on the right side of the general momentum. It doesn't really matter the price. And this is important as an investor. All right. So I just don't see it. With the bonds doing what they're doing, I don't see it yet. And when I see it, I'll mention it, but I don't see it. And Powell seems to be not helping, okay, in that area. He's doing his thing, and I don't see him helping out the bond market in the ways that he can. All right. So anyway, cool, Mr. Keen. All right, cool. Glad you appreciate it. All right. So Alex asked me a question here. Alex, he wants to see eGold. Okay. Now, Alex, I'm only answering questions from members. Alex has been he's a moderator. So EGLD. Let's take a look here. USDT. And here's the thing, eGold. Oh my God. This is the one that you've been talking about forever from Romania, right? He's always been saying e-gold is going to be something. Where was this thing a few weeks ago? $23. I have to say, you called it. I remember I used to tell e-gold's going to zero. I remember I used to tell you that. Is this the one? So let's go to the weekly chart here. Alex has been talking about this thing for years. He'd be like, "Oh, e-gold. I know the guy from Romania," something like that, right? So e-gold has this spike here. Obviously, it moved along with this Bitcoin move. Clearly, right? There's some sort of coincidence or some sort of correlation with that Bitcoin move. It pushed that low and then squeezed it hard, right up to this resistance. Look where we are. So while that looks pretty good, it may just if that's just a knee-jerk reaction to Bitcoin, then I wouldn't be overly excited about it. Just wait for it to pull back to its supports, because again, e-gold doesn't have the support. Plus, gold itself, I don't know if there's any relation with actual gold. I don't know why it's called e-gold or what they have to do with gold. Gold, the metal. Here's gold. All right. I mean, it looks very similar, right? Gold is having trouble again in this 2000 area. I think initially that gold situation had to do with geopolitical conflict, which is typical, right? So this is back to e-gold, and maybe it has something to do with that. But when you zoom out, really, this is just sort of like a blip on the radar, right? So I would certainly keep an eye on it, but I would not go crazy with this, right? Basically, find your supports if you're interested in accumulating, and wait for supports, right? Your next support on this thing is what, $37? Yeah, 37.75, something like that. You can round that to 37.50, or if you want to round that to 38, something like that. This thing's at 44.32 right now. So you got some time here. No rush, right? Definitely interesting. Nice to see. Thank you for bringing that one up. So I hope that gives you some perspective on that. Just always resort back to the structure and the bond market, because that's going to be a key. I think that's going to be a key sign when these things will be worthwhile again. All right. And I use that bond market thing is not something I invented. It's from the Pring-Turner market cycle, and it's been known for quite some time. This is what fund managers use for sector rotation. That's basically how they gauge what sectors they're going to rotate into, right? And it has everything to do with the bond market. All right. So anyway, all right, you guys, I've been talking too long as usual, but I like to answer questions and stuff. All right. All right, let me just look back at the chat here. All right, any other questions, you guys? All right, I got that off. Okay. Let me see. Okay. All right. Cool. All right, you guys. So if I don't have any other questions, I want to thank you all for spending some time with me here today. I hope you realize that, this area here is very vulnerable on Bitcoin. That's why I put in the trading view title, don't be a sucker. Don't get sucked into this, and don't get sucked into blind optimism. All right, that's an important point. You want to weigh probabilities. You want to use levels, okay, and structure. That gives you short-term probabilities, or at least some sort of feel, some possibilities, a narrow range of possibilities, so that you can better manage your risk. This is not a game about, I'm going to be a millionaire tomorrow. That's what everyone wants it to be. That's what a lot of people like to present it to be, but it's not like that. This game is about managing risk. And if you can do that well, then you grow your account as a byproduct to managing risk effectively. All right. So you need to know how to define risk, and you need to understand how to weigh probabilities, and you need to focus more. That's really where charts shine. That's where charts give us any value, is there. Okay. When it comes to probabilities and managing risk, not telling the future. Charts are useless for that. If you look, in one point I'm going to leave you with before I go. Okay. No problem, Isaac. When you want to learn about how to make money, which is why we're all here, look at how the professionals in this industry make money. And I'm not talking about YouTube professionals. Real professionals don't stream on YouTube, okay? They don't. I'm talking about like institutional professionals, the guys, Goldman Sachs, right? Jane Street Capital, right? Market making firms, banks, institutions. If you really look at how they make money, and how they make markets. They don't sit here and stare at charts and be like, whoa, I think in the future it'll be here. They have analysts come out and they make their forecasts, but that's just to make investors and retail people happy. That's not how they really make money. They don't place big bets on things like that. They're looking for the least amount of risk possible. That's how they make money. And they do it in terms of microstructure. I'm not going to get into all that, but my point is, look at how they make money. And it will say a lot about this game. Also, look at how Forex dealers make money. Look at how prop firms, look how they make money. All right. You want to learn how they make money? There's a great complaint from the CFTC against my Forex funds. Google that, and it explains how they make money. Okay. So if messing around with charts and trying to forecast the future was a way to make money, they'd all be doing it, don't you think? So please keep that in mind. And that will give you a lot more perspective when it comes to using the information on a chart. Charts are not completely worthless. There is some value here, but you need to understand where it is and why it provides value, okay? So that it can better shape how you manage risk. Okay, you guys, retail is pushed by the industry to do exactly, Kai, because retail is where profit comes from. Think about this. More than 70% of the volume in the US equities market is algo, okay? More than 70%. That means less than 30% is retail. What do you think that retail is there for? It's to be fleeced, okay? You can't beat algos. So understand your role so that you cannot be part of the herd and serve the purpose that they want you to serve. Okay, I make it sound like a conspiracy theory, but that is how the industry makes money. The retail trader is basically sheep to be fleeced, and you don't want to be that. So open your eyes and realize how they make money. They don't do it the way I'm showing you here. Okay, it's not about charts and all these YouTubers. They're all lying to you. They don't make money this way. They make money randomly, yes. Okay, and it's very easy to show random results and all this and all that, and it looks great, but it's fake. Okay, just so you know. All right. So just keep that in mind, and it will help to better shape how you manage risk. Like I said, a chart is not completely useless, but use it the right way and don't get sucked into these gimmicks. Okay, you guys. So I'm going to stop ranting because I keep talking and I don't stop. All right, you guys. So thank you guys for taking the time with me here today. If you have any questions, you know where to find me. Check the links in the description, and that'll be that. So enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.